talk about Jane Street because they've deposited over 4,800 crore rupees into SEBI's escrow account, and the market regulator has in fact confirmed the receipt of the payment to NDTV Profit. Azeez is joining in with those important details.
That's right. Jane Street has informed the market regulator that it has deposited 4,800 crores in an escrow account, and it's seeking relaxation in some of the restrictions that has been imposed as part of the interim order. Now, some of these restrictions include allowing access to the markets and dealing in securities. It also allows free movement of funds from the bank accounts which were frozen because SEBI had put in restrictions on debit from these bank accounts. It also is asking for restrictions on custodians and depositories with respect to debit of securities from them, and approval and trading of approval for custodians to trade so that they can trade in them. SEBI has also, as part of the interim order, had put in restrictions to RTAs to not to allow transfer or redeem or redemption of any of the securities. So these are some of the restrictions which Jane Street wants SEBI to remove before it can begin trading, because now it has deposited the entire amount into an escrow account.
Well, absolutely. Tell you what, let's also take the conversation forward with the guests that we have lined up for you on the show. We have Sandeep Parekh, who's a partner at Finsec Law Advisors, as well as Feroze Azeez, joint CEO at Anand Rathi Wealth, joining us. Thank you so much, gentlemen, for taking time out and joining us this afternoon. A very good afternoon to the both of you. But the first question that I wanted to take was to Sandeep. Sandeep, I want to understand what you think this deposit really means, because you do have Jane Street that has deposited 4,800 crore rupees. What's your first take when it comes to this?
Oh, if you read the final 2-3 pages of the order, it suggests there's an interim profits of that. Then Jane Street is kind of free to trade, of course, subject to not manipulating the markets again. So since they have deposited, my guess is they would be allowed to trade. And they seem to have written to SEBI saying that we paid the money, now let us trade, because the logistical, all the exchanges and depositories must have frozen their accounts. So they would require SEBI to either pass an order or give instructions to the market infrastructure institutions to allow them to trade. So I guess that's the stage at which it is. Whether they challenge this before SAT or they don't, it's kind of hard to say today.
What's a normal timeline for a regulator to pass an order like, to remove restrictions? Is there a particular timeline which is available for the regulator to do so?
No, so it should be automatic really, because it's in terms of the order itself. Like I said, the logistics may take a day or two, but it should happen quickly. Unless, of course, SEBI goes around and changes the order, saying that this is not what we meant really.
If you look at the order also talks about monitoring of trades of Jane Street, and exchanges should be looking at it very closely. That's what it says. And Jane Street, on its part, has also said that it's going to challenge this order in a legal manner. So do you see this as a prolonged one, and what is the kind of legal options available with Jane Street with respect to challenging this speaking order?
See, they can challenge this order today, which means that they're saying that we paid up the money, but we don't agree with your analysis or your conclusion, and we have committed no wrong. And therefore, they go to the Securities Appellate Tribunal or SAT, and they challenge this order, which is at an interim stage. Now, if they do succeed before SAT, this order will get set aside, and then again, they'll be able to trade. Versus them not challenging, which is the second option, in which they say, okay, at the interim stage, we've paid the money, you do your investigation, and at the end of it, if you find us guilty, we'll kind of respond to that at that point of time. So I think both options are possible today. The third option, which is not today possible, but would be possible later, would be post-investigation. They can also settle this amount by paying us settlement amount.
Because we've been told by the regulatory sources that it will take at least 6 to 9 months before before the investigation
That's
is
right.
completed, and then they
That's
will
right.
issue a show cause notice to Jane Street, and wherein then Jane Street will be allowed to come and represent and present their case.
That's right. That's right. So I mean, investigation typically does last 6 months. So after investigation, they come out with another second show cause notice where they reply to the final findings, and then after an appearance and a reply to that, they can either say we can let them off, saying no manipulation occurred, or they can penalize them, bar them from the market, etc., and of course impose disgorgement amount of the profits they make.
Sandeep, just hang on there. We have Feroze Azeez, joint CEO at Anand Rathi Wealth, also joining us. Feroze, do you see an impact coming into the market once Jane Street is back in trading?
I personally think, of course, volumes have come down. Of course, I think Jane Street coming or not coming may not have too much of an impact, but it'll have an impact on the skews of expiry day, point one. Point two, I think the July 1st circular, which is a very good circular, will definitely have certain impacts. The July 1st circular, which is a first of its kind, which SEBI has put out, and that's most welcome being a derivative trader for the last 20 years. I would say we've moved from notional values to delta values. So coming back to your pointed question, whether Jane Street being allowed to trade, will it have a large impact on the volumes? The answer is no. Will it have expiry day skews if HFTs, high frequency traders, have certain strategies? Will it change the skew? Skew is nothing but the volatility at which out of the money options are priced. That is going to change for sure if large volumes HFTs are to be traded again. Third, I personally think that Jane Street's position on this would be saying that if I have a cash position and if I have a derivative position, if one of them makes a loss, the other makes a profit, that's called a hedge, right? So what's illegal in that is what I think if they ever challenge, like Sandeep Bhai said, that will be the grounds on which I would preempt a derivative trader will challenge, saying that एक market में नुकसान होना दूसरे में फायदे होने को तो प्यार से hedge करते हैं. That's one. And the one thing which I think SEBI has been warning, I think what is the key takeaway for a market participant is SEBI has been warning that derivative people are losing money. There is a systemic reason why people are losing money. More people are losing money and lesser people are making more money. That is because most derivative traders don't understand Black-Scholes pricing model. It is like dealing in a stock fundamentally and not knowing what is discounted cash flow, right? But what I've met SEBI professionals in this context, and I would say they're the sharpest guys, very, very contrary to my perception before I had stepped into SEBI's office. Very, very sharp. And I'm sure whatever they're doing is the most sensible because we have very little data of the case. They know my position before I do. That's how sharp they are. So I'm very, very happy. Whatever steps they take are the ones which are in the right direction is what my confidence is after having some first-hand information of the professionals who are handling this.
Feroze, you spoke about the July 1st circular. Now, what it does also is that it brings down the overall positions that a trader can hold because of the delta trading restrictions which comes into play. Because earlier, before Jane Street order, there used to be huge positions that which were there on both the sides, and netting off never used to happen, and that's creates some kind of volatility. Do you see that volatility will not be there now, and because there are restrictions on intraday positions as well as end of the day positions, the volumes will, even though the HFTs will be there, but it's not going to create a havoc with respect to the kind of volatility or premiums moving in any one direction.
I think the circular has different impact on different kinds of options. Because we were in notional before, notional by which I mean if tomorrow Thursday is an expiry, which it is, the lowest put option is 22,950. The price of that put option as we speak would be 1 rupee. But the notional value of that is for 1 lakh quantity, it is 230 crores approximately. So before 1st of July, a Feroze as an individual was not allowed to buy more than 2.25 lakh put options of 22,950 naked. Okay, that's what notional meant because the value of a notional is still 22,950 multiplied into the quantity and there was a restriction of 500 crores. Now we have spoken of it being 500 crores of delta. If I have to look at the delta of this option, delta is nothing but the correlation of the option price with the underlying. The delta is negligible. So Feroze today, instead of 2 lakh, can do almost 50 lakh quantity and still not breaches 500 crore limit. So in the world, NSE is the largest derivative contract wise, not value wise. So contracts might go up, value of delta might come down. That's what I personally believe. Second, only one thing in this circular which is so desired, and I'm sure at an appropriate time, knowing SEBI officials being so smart, will do it is monitoring this on an intraday basis. I don't think the intraday limits have come on the index options. So index options are separate, futures are separate, stock options are separate. So there is going to be some action on stock options, in my opinion, logically. And that's what I would say is the logical next step. And intraday monitoring, I don't think the infrastructure is there, is why they're not monitoring it intraday. But if high frequency traders have to be restricted on very large one side positions, intraday becomes more important than end of day.
Sandeep, quickly, you see this has to be a long drawn process with respect to the finality coming in options investigation.
Yes, it will be pretty long drawn because if this will go through not just SAT but Supreme Court. So both at the interim stage and the final stage. And given how large the stakes are, I'd be surprised if it doesn't go into 2 rounds of litigation before both SAT and Supreme Court. So that's certainly before real finality is achieved, probably looking at years, not months.
Feroze and Sandeep, thank you very much for joining us today on NDTV Profit.